crypto can do that to you. Have you locked.
It's October 13th, 2021, and this is Markets Daily from CoinDesk. I'm Adam B. Levine here again with Adrian Bless for your daily news roundup. On today's show, we're talking Bitcoin, login with Ethereum, the latest headlines, and more. This episode is sponsored by Kava, Nexo.io, and Market Intel by Chainalysis. And just a reminder, CoinDesk is a news source and does not provide investment advice. Bitcoin's price dipped below $57,000 on Tuesday, as analysts said the extreme buying in the market could mean the rally may soon be running out of steam. They pointed to the Fear and Greed Index, which entered extreme greed territory last week and is at the highest level since early September, which preceded a sharp sell-off in Bitcoin. Comments from JP Morgan CEO Jamie Dimon at a conference on Monday contributed to a sour mood across crypto markets. Dimon stated that governments will regulate Bitcoin, which he personally thinks is, quote, worthless. Some analysts consider the recent rally in crypto prices as being driven by continued speculation the U.S. Securities and Exchange Commission, or SEC, will finally approve a Bitcoin Exchange-Traded Fund, or ETF, although others are skeptical that an approval of an ETF would be beneficial for the price of Bitcoin. The Relative Strength Index, also known as the RSI on the hourly and 4-hour charts, remains in bearish territory below 50, so a continued decline can't be ruled out. If the price dips too much lower, the chart suggests $50,000 would be the price to beat for the bears. On the other hand, bulls need to get the price back above $56,612, created in Asian hours, to take greater control and attack resistance again at $60K. But even as the news isn't so good in the short term, we're seeing an increase in transaction activity on the Bitcoin blockchain, which could point to fresh buying demand this quarter, according to data compiled by Glassnode. The value and size of transactions are also increasing, which could mean large buyers are starting to accumulate BTC after the sell-off last month. And transfer volume of greater than 3% of the realized market cap typically marks the beginning of a bullish phase as the relative value of network utility increases. That's according to Glassnode. Today's crypto coverage comes courtesy of CoinDesk's markets analysts Dominic Dantes, Tracy Wong, and Omkar Godbole. Bitcoin is currently trading at $55,106 per token. That's down 3.65% in the last 24 hours, while Ether is trading at $3,466. That's up 0.75% in the same time period, according to the CoinDesk Price Index. Shifting to traditional markets, U.S. stock futures ticked up and oil prices stabilized ahead of fresh data on consumer purchases, on consumer prices, and major earnings, both of which are expected to provide some insight into whether recent concerns about inflation are warranted. Futures data of the S&P 500 added 0.1% on Wednesday, pointing to a pause in the broad market index's 3-day decline. It's down nearly 1% so far this week. Meanwhile, NASDAQ 100 futures rose 0.4%, suggesting modest gains for technology stocks after the opening bell. Hopping across the pond, European equities ticked higher on Wednesday as positive sentiment around corporate earnings tempered caution about U.S. inflation and potential interest rate rises in the world's largest economy. Europe's regional stock 600 share index opened 0.2% lower before rising 0.5% as critical tech stocks lifted guidance. London's FTSE 100 lost 0.2%, while futures markets indicated that Wall Street's blue-chip S&P 500 index would add 0.3% in early New York dealings. In Asia, major benchmarks were mixed. The Shanghai Composite Index added 0.4%, while Japan's Nikkei 225 slid 0.3%. Markets in Hong Kong were closed due to a typhoon. Today's traditional markets coverage draws from the Wall Street Journal and the FT. And in related news, here are a few quick headlines we're tracking today. You can find links to the full stories in the show notes for this episode. After the break, we'll take a look at what standardizing login with Ethereum could mean. But first, here's what's hot. Turning to big picture news, inflation revival is a victory, not a defeat for central banks, so they say. Yes, inflation is back, and you should probably be relieved, if not outright happy. At least that's the verdict of the world's top central banks, who hope they've hit a sweet spot where healthy economies see prices gently rise, but not spiral out of control. The current inflation rise is not without risk, of course, they say, but comparisons to 1970s-style stagflation, a period of high inflation and unemployment combined with little or no growth, appears to be unfounded. At least they hope so. Reuters has the full report in the show notes. Meanwhile, consumer prices are still rising fast, and it's a problem for Washington and Wall Street. The White House and the Federal Reserve are watching inflation data nervously, hoping that rapid price gains will fade soon, but increasingly admitting that the cooldown is taking longer to materialize than they had expected earlier this year. The Consumer Price Index likely climbed by 5.3% in September compared with the prior year, according to a Bloomberg survey of economists. From August to September, the index likely rose 0.3%, and while monthly gains have slowed from their breakneck pace earlier this year, they're still abnormally rapid. The price pressures are not fading as rapidly as policymakers had hoped. The New York Times has all the details in the show notes. And speaking of monetary policy, Three U.S. Federal Reserve policymakers on Tuesday said the economy is healed enough for the central bank to begin withdrawing its crisis-era support, cementing expectations that the Fed will start to taper its monthly bond purchases as soon as next month. Reuters also has that one. And on the subject of prices, this should be a great time for energy investors, but few of them are still around to enjoy it. Years of awful returns and pressure from clients to exit the oil and gas business have left fewer and smaller firms able to take advantage of rising prices and help boost production. Those left are moving to increase output, but they're relatively small players who likely won't be able to make a significant impact. Investors are steering capital away from fossil fuels and towards companies that rank high in environmental, social, and governance, or ESG measures. The Wall Street Journal has that one. And zooming in on supply chains, Apple Inc., the world's most valuable company, has finally joined a growing list of household names from Toyota to Samsung, forced to cut back on business because of a global shortage of semiconductors. Apple is now likely to slash its projected iPhone 13 production targets for 2021 by as many as 10 million units. Bloomberg reported this one on Tuesday. And taking a closer look at labor, nearly 4.3 million workers in the U.S. voluntarily quit their jobs in August, the Labor Department said on Tuesday. That was up from 4 million in July, and by far the most in the 2 decades the government has been keeping track. According to the New York Times, that explosion of quitting is the latest evidence that the balance of power in the labor market has swung towards workers. Turning to international news, ETF manager BetaShares said on Wednesday it expects its Crypto Innovators Fund to start trading on the Australian Stock Exchange, or the ASX, in the, quote, coming weeks, subject to regulatory approval. The ETF will offer exposure to crypto-focused companies aiming to track the Bitwise Crypto Industry Innovators Index, the firm said in an emailed statement. Current constituents include crypto exchange Coinbase, mining company Riot Blockchain, and Bitcoin hodling business intelligence firm MicroStrategy. CoinDesk's Jamie Crowley has all the details. And in what could be the reinvention of a bank that actually pays you interest on your deposits, the Switzerland-based SIBA Bank has launched a product called Earn, which will let institutions generate income from proof-of-stake protocols such as Polkadot, Tezos, and Cardano, with other networks being added over time. The platform will also enable investors to lend Bitcoin and Ether through the bank, the company said Wednesday. The Swiss financial regulator who has jurisdiction here says it'll be the first fully regulated bank to offer investors access to yield and decentralized finance, or DeFi, protocols. CoinDesk Jamie Crowley has the details. Turning to industry news, the International Monetary Fund, also known as the IMF, is worried about the cryptoization of the developing world. In its Global Financial Stability Report, which it released on Tuesday, the global financial institution said that cryptoization, the use of foreign or digital currency by a country, carries, quote, significant risks and is an inadvisable shortcut, end quote, for developing countries trying to boost their economies. The IMF report said that cryptoization, which is just such a fun word to say I can't stop saying it, such as El Salvador's recent adoption of Bitcoin as legal tender, could hamper central banks' efforts to set monetary policy, cause liquidity risks, and destabilize economies. CoinDesk Cheyenne Ligon has the full report in the show notes. And yesterday was an interesting day for NFTs, as Coinbase follows FTX.us and also recently Binance into NFT trading. The exchange's marketplace will support Ethereum-based NFTs and comes just a day after the release of an NFT marketplace from rival exchange FTX.us. If FTX's bet on Solana is a signal that other blockchains are poised to take a slice of Ethereum's hold of the NFT business, Coinbase is sending a different message, that Ethereum's NFT dominance has room to grow. Coinbase's product will take a direct swing at juggernaut market OpenSea, which is currently home to the majority of Ethereum-based NFT trading. CoinDesk's Eli Tam has the report. And according to another report out of Big Bank City, Disney, Electronic Arts, Robinhood, and the WWE are set to benefit most from NFTs. The bank outlines winners and losers from NFTs in its latest Disruptive Innovations report. Citi said that video games and music are industries that are most likely to see positive change from the influx of NFTs, which are, of course, blockchain-based tokens that prove ownership of a piece of digital content. Trading in NFTs climbed to $10.7 billion in the third quarter, an increase of more than 700% from the previous quarter, according to a report by blockchain analytics firm DappRadar. Other U.S. companies expected to be helped by NFTs include video game publisher Activision, Formula One Group, Discovery Inc., Viacom CBS, and World Wrestling Entertainment. Check out all the details on that one in the show notes, courtesy of CoinDesk's Josh Feynman. And in a story we'll just call Andreessen Horowitz Goes to Washington, several executives from the VC firm, which has a significant crypto fund in its portfolio, will tell policymakers at Capitol Hill and the White House why they should regulate Web3, CNBC reported on Wednesday. A16Z defines Web3 as, quote, a group of technologies that encompass blockchain, cryptographic protocols, digital assets, decentralized finance, and social platforms, end quote. The firm's executives will encourage policymakers to create a national strategy for these technologies, developing appropriate regulations for the full range of products and services beyond those that would be regulated by the Securities and Exchange Commission. You can find the full report in the show notes, courtesy of CoinDesk's Jamie Crowley. And in lighter news, here's our associate producer, Adrian Blust.
So we know the blockchain is proving to be an exciting playing field for big name and underground artists alike with the use of NFT marketplaces, but it also seems to be a prime spot for delinquent artists exiled from the traditional art world. Hashmasks, the digital art collective that's put together a collection of thousands of high-end non-fungible tokens, is the producer of the recently announced NFT project by Wolfgang Beltracchi. Beltracchi is the infamous German art forager who recreated and sold the works of famous artists for over 30 years. He was finally caught in 2011 and spent more than 3 years in prison in Germany. Since his arrest, Beltracchi has been banned by museums, galleries, and auction houses from showing and selling his work. That makes him a great candidate, though, for an NFT collection, Hashmask said on Tuesday. Quote, "There is no better artist to utilize the blockchain to express their art than Beltracchi," said the founder of Hashmasks, who goes by the name of Hansen, to CoinDesk. Hansen continued, "He is the most censored artist. Hence, we can use the Ethereum blockchain as intended to give access to an otherwise barred artist." End quote. CoinDesk's Nelson Wong has the full story and links to the NFTs themselves in the show notes.
Thanks very much for that, Adrian. Stay tuned for after the break. We'll take a look at a standardized version of Sign In with Ethereum and what it pretends. Back in a minute.
Kava gives you the ability to earn more by connecting the world's largest cryptocurrencies, ecosystems, and financial applications on DeFi's most trusted, scalable, and secure earning platform. Kava is an institutional-grade cross-chain engine built to scale on the largest decentralized proof-of-stake network. With loan APYs as low as 0% and reward APYs as high as 200%, Kava is the safest place for you to grow your digital portfolio. Mint stablecoins, lend, borrow, earn, and swap safely across the world's biggest crypto assets with Kava. To learn more, visit kava.io/marketsdaily. Looking to make the most of your crypto assets? Nexo.io's got you covered. Grow your wealth securely with Nexo's high-yield interest accounts. Buy crypto on your terms, directly within Nexo's platform, and start earning daily compounding interest right away. Get the cash you need without selling your crypto from just 6.9% APR. Instantly swap between 100 crypto and traditional currency pairs. And don't worry, Nexo is insured against losses up to $375 million. Get the most of your crypto at Nexo.io. That's Nexo.io. Market Intel by Chainalysis provides you with the ultimate crypto dataset to help reach your research and investment goals. As an asset manager seeking confident crypto investments, or a venture capitalist identifying and funding emerging players, you'll leverage 53 metrics across 10 categories, like whales, exchanges, liquidity, and supply, to maximize your insights. Get started now by heading to markets.chainalysis.com. That's markets.chainalysis.com.
Today's featured story is an opinion piece from CoinDesk's Chief Insights columnist, David Z. Morris. Over the past few weeks, Facebook has been raked over the coals in the press and the U.S. Congress for practices that are hard to regard as anything short of evil. In essence, the company allegedly knew for years that its algorithms were pointing users to content that was harmful in a variety of ways, but did nothing because change would mean losing money. If you've ever used your Facebook account to log into another online service, you've been helping the social network make your online experience more toxic, even if you're not a user of Facebook.com itself. Or maybe you do much the same thing using Google or Apple identity services. All involve
.com.
Today's featured story is an opinion piece from CoinDesk's Chief Insights columnist, David Z. Morris. Over the past few weeks, Facebook has been raked over the coals in the press and the U.S. Congress for practices that are hard to regard as anything short of evil. In essence, the company allegedly knew for years that its algorithms were pointing users to content that was harmful in a variety of ways, but did nothing because change would mean losing money. If you've ever used your Facebook account to log into another online service, you've been helping the social network make your online experience more toxic, even if you're not a user of Facebook.com itself. Or maybe you do much the same thing using Google or Apple identity services. All involve major trade-offs, like possibly having your data shared with US intelligence. It's one of the core quandaries of today's internet. While the net's inherent anonymity is definitely a good thing, It leaves users of ID-reliant tools in thrall to major centralized identity providers and their seemingly inevitable abuses. Blockchain developers have long talked about developing decentralized identity standards to save us from the dangers of big login, and at least one significant step towards that future appears imminent. A standardized version of sign-in with Ethereum is coming. It's just what it sounds like, a standard way to use an Ethereum wallet that you own as an identifier across multiple services. If your first thought is, my name isn't even attached to my ETH wallet, that's exactly the point. Using a cryptographic marker as an identity means the user, not the identity provider, has total control over what information is associated with it. Eventually, you'll be able to decide, for instance, whether a particular service needs your name, proof of your age, or a glimpse at your ETH balance. You won't have to send all that information to every service you use. The standard is being developed by Spruce Systems, co-founded by former Consensus staffers who won a recent development bid from the Ethereum Foundation and Ethereum Name Service. The initial goals are modest, always a good sign in my book. Quote, "We're starting with not as serious, not as strong identity," said the co-founder and CEO of Spruce. Continuing with the quote, "because we want to be battle-tested. In the short to medium term, it's more like social media credentials that tie Twitter handles to a blockchain. We don't want to provide know your customer credentials for buying millions of dollars of financial securities right yet," he said, though that is a possibility down the road. Applications for the initial iteration are more likely to include lower security uses, like gating content for non-fungible token holders. But eventually, by integrating secure off-chain storage, sign-in with Ethereum could also offer strong options such as government ID. Users will be able to control access to that data on a case-by-case basis and remove or disassociate it at will. One significant hurdle for a standardized sign-in with Ethereum is the inherent risk of reusing any identifier, particularly an address, that can likely be pretty easily linked to wallets used for financial activity. Though the idea of using multiple or disposable wallets as a security measure is familiar to crypto users, it's probably a bridge too far for normies, at least for now. One more reason the project is starting with baby steps. At least to start, it's a community project, and we'll be holding weekly community calls as Spruce develops the SIWE standard. Information about those calls and how to participate, should you want to, will be available soon at login.xyz. And that's our show for today. Thank you very much for listening. This episode was edited by Adrian Blust, and you can send us an email at podcast@coindesk.com. We'll be back tomorrow with another news roundup, and just a reminder that CoinDesk is a news source and does not provide investment advice. We'll see you then.
Welcome to the BitBoy Crypto Podcast. This audio is pulled from the videos we release each day. Now, please keep in mind some of the content does require visual support, and for that, make sure to check out the BitBoy Crypto YouTube channel.
Welcome to BitBoy Crypto, home of the Bit Squad, the largest and greatest crypto community in all of the interwebs. This is Around the Blockchain. I'm your host, DZ. We come to you Monday through Friday at 5:05 p.m. Eastern Standard Time. We were a little bit late today, and he isn't even in the building. But we're going to blame BJ. I think that's about right, Frank. I don't know if your mic's set up, but are we just going to go with this was BJ's fault?
That is 100% correct.
All right, it's 100% correct. You heard it there. All right, so yeah, we have a great episode. We're going to talk about Facebook crypto exodus. They're having all their lead techs disappear. We got the Bitcoin bulls holding strong. And why does ETH want to pop? Yes, perhaps the camera was set for short mode. And now we're back. All right, now we're back to a good level here. All right, so there's two people standing by. They make Frank get up from the controlling desk, you know, and we got the peanut gallery just watching them. Anyways, man, I had to defend you there for a second. All right, we got a great panel today. We're going to start off with Hack Crypto first time we've actually done an episode together, so I'm looking forward to this one. We also have Crypto Jeb. Make sure you don't check out his upcoming videos because some of them might trigger fans of certain coins. We're not going to get into specifics there, but I'm telling you that so you can go in there and give him a thumbs up in there. Also, we have Crypto Keeper. Maybe going to start popping up regularly out here on Tuesdays. And big news for J Chains, aka Ruthless J, a brand new father. That's why he wasn't hosting. I mean, I guess if you're going to take off work, you know, a human being born is a good, I won't even say excuse. We'll say it's a reason. So congrats on that, man. Real quick, you know, just keep it on you for a second. Are you, you feeling any different here? I mean, was it like a night and day difference? You know, are you all soft and mushy on the inside?
Soft and mushy. I am in love with my daughter. She's so cute. She's so special. She changed my life immediately. Absolutely.
How small was she? Like, what were you looking at? Was it like looking at you? I mean, this could have came out like 10-pound head or something. I don't know.
Yeah, well, that's what I was afraid of. I have a large head, so I was hoping that she wouldn't get that from me, which she didn't. She got her mom's body. She's a petite little thing. She was like 6 pounds, little tiny baby. She's so
well.
cute, man.
Congrats.
I love her.
Congrats. If you like the sanctity of life, make sure you go ahead and give us a like in the comments here. And I'm trying to pull up the YouTube comments and the Twitch comments today. So yeah, we got an evening Twitch stream. That is right. Stinky Colas. There's one thing I miss about Twitch. It's the names. The names are always fantastic. All right, well, yeah, let's first check out Coin Market Cap. It's been quite an eventful week. We have Bitcoin starting to get a little bit lower. It's looking, I don't want to say scary, but we are heating up, and it was heating up fast. So we had a fantastic run up for the first 12 days of October. So a little cooling down. There's nothing wrong with that. Ethereum. People are saying, oh, Bitcoin's pumping. How come Ethereum isn't following? Well, when Bitcoin's dumping and then all of a sudden Ethereum's not dumping, well, maybe it's good that they're not totally correlated assets there. BNB having a really good day. I'm glad I pulled out of most of my Binance alts there. So consolidated in BNB. Looked like it was a good move. And we have Solana. Solana has been a laggard the last few days, so it's good to see that it's back in the green. If we look at the top gainers and losers, Ravane, you always see it up there. It's always doing something, acting a little funny there. We have Waves, OMG, also a really good song by Usher. We have Axie Infinity. I mean, we've seen a lot of news about that. They're still continuing to just be gigantic. Look at some of the losers. Crow. Not talking about Bruce Lee's son here, who tragically died in that accident on set. No, we're talking about Crypto.com. It's down a little bit. IOTA, Arweave. I mean, we're seeing some of the same names. Although I do like, you know what? It's okay that BSV is down. I don't want to celebrate it, but sometimes that is a scary coin to see pumping. Typically, Bitcoin, there's a dump in the works. A lot of people are just, putting their Bitcoin profits. So, but let's just get right into the first topic. We started a little bit late. We have a Facebook crypto exodus. We had some of the top engineers of Facebook's wallet dip out. And I'm not even going to try to say their names. I actually wanted to pull up my screen just so you can see that I'm not trying to troll or anything here, as BJ would say. So we had a Nassim and a Riaz. Man, I mean, is this a prank? I honestly don't even want to try to pronounce that, but yeah, that's a lot of that's a lot of vowels in a row. And then that's a lot of vowels. I don't know what to say. So those two left. I mean, I just want to say it's Nassim and Riaz. I'm not trying to be disrespectful. I just don't want to be disrespectful for bastardizing those names there. But yeah, they're leaving. They're leaving Facebook's team, and they're going to go work for Andreessen Horowitz, also known as A16. Andreessen, they got their fingers in everything. I mean, it's almost insane. I mean, they're invested in Bitcoin, to Coinbase, to Dapper Labs, to OpenSea. It's not just crypto. I mean, they're like early investor for Uber, Airbnb. I mean, they're definitely smart people. It's Mark Andreessen, the other guy's Horowitz. So they're losing techs, they're losing devs. These engineers, they're running away from Facebook and they're going to these other projects. It wasn't just this one. This seems to be a trend. We've seen it before. Now, Crypto Keeper, I guess we're roughly around the same age, so I want to bring it to you. Do you think that they see the writing on the wall and they think Facebook is the next MySpace? Are they leaving a sinking ship, or is this more just, maybe about money and this isn't bad news for Facebook?
So I don't think it's about it being a sinking ship. I think more what I would see is, as you look at it and you wonder, you say, okay, why is this happening? Are there things going on in the background that we don't know about yet? i.e., yeah, things just magically shut down recently and everything just, disappearing, right? Is the wallet project actually failing? Do they not approve of some of the invasion of privacy that Facebook is all about and that we all know that they're about? Is there something going into the coding on this project that basically invades our privacy even more? I would actually question what is actually just going on that we can't see, because I think too many times people leave over real world issues that they're not allowed to actually speak about. And if you look at some of the articles, they don't get into any of the specifics. It's just, hey, we went over here. They gave you the political answer and said we had a huge opportunity. We didn't want to pass it up, blah, blah, blah. When in reality, I think they know that if they talk bad about Mr. Zuckerberg, it is all over for them. And so, yeah, I have to wonder what's going on in the background. That's more where
Yeah,
I'm
talk bad about Mr. Zuckerberg, you might end up getting grilled.
yeah.
Verbally,
Or
of
worse.
course, not grilled with his meats. I didn't mean that way. Now, J Chains, you're around then. I mean, you had a MySpace, right?
Yeah.
All right. What would you consider worse indicator? Would you say, Facebook losing techs and devs is a bad sign, or if say they came out and said, "Oh, growth is slow, 10%." But what do you see as a more alarming factor here? Like they're losing their employees, or if their growth slowed down a little bit?
Well, to be perfectly honest with you, man, like I feel very biased about this whole situation. I hate Facebook. I hate Facebook with a passion. I dumped it several years ago. I have to use it for some of the stuff that I do for work for Marketplace only. So I set myself up with just a stupid account to be able to use Marketplace. But I think that losing some high-ranking devs is a telling sign of something's going wrong. And much like Keeper said, man, like what's going on behind closed doors that they can't say, and then that's why they're leaving. Because I mean, we all know, we've all worked in corporations or in business before and know that if there is a non-amicable split, you have to go about a diplomatic way of announcing this. It just kind of happened that way, or this is the way, we're moving in a different direction, whatever. So that something bad's happened or is happening, and these guys said, no man, we're done. Obviously Libra wasn't a thing, so let's move on to something that's working. And I think they're hopefully going to get this right with their new positions.
Yeah, this Twitch chat, y'all are being hilarious here. Tom was my first internet friend. Mine too. I actually have a funny story about Tom. I first opened MySpace. I said, this is weird. This guy is just, I don't like this. So I deleted him or removed him as a friend. But then after 12 hours, I was like, oh, it's everybody's friends. Oh, this is kind of a thing. So let me send a friend request. And then it just languished in his inbox. So I actually didn't have the Tom Thumbs Up guy as a friend because I got weirded out and deleted him. So the whole time I had MySpace, I was like, man, I wish he'd accept my friend request. But yeah.
Did you have Tila Tequila as one of your friends?
Oh,
yeah,
no.
I mean,
yeah.
I followed her. She was in my top 8. What are you talking about? So, yeah, I would love MySpace to make a comeback. I can organize my top 5 according to cryptos they support. I could think of a few coins where I'm sure that's it'd be an echo chamber, but we won't get into specifics or call out some of these coins. Now, Hack, I want to ask you this. There seemed to be a little bit of fishiness. There's almost like a shady thing going on. So Andreessen Horowitz, these techs, they went to that company. Well, Mark Andreessen is on Facebook's board of directors. So do you think, was it shady to you that, that a board member was, in a sense, poaching these employees? Like, what were your thoughts on that?
Yeah, so I like thinking of this headline specifically as kind of the future of work. It's actually kind of transpiring where you have these brilliant people, whether Andreessen has invested in them or any other smart fund, they're moving away into like a decentralized way of work. And I talked to a company called PiDAO about this like a couple of weeks ago. And essentially, people are able to work for a decentralized organization. They can contribute quantifiable work. And as an engineer, that's literally lines of code. So anybody watching this that is a programmer, you could go and work full time, stake your payment, and make more money. So I think beyond work, these engineers are noticing like, oh, I can actually just go and work for a decentralized organization, do whatever I want, contribute value, and make 5 times as much as I would and have full freedom and work from anywhere and contribute in a creative way. So I think that it is a positive way that we're seeing this shift to a new way of working for engineers out there and the smartest that are coming from some of these FANG companies. But yeah, Andreessen does have their hands in quite a bit. That's a testament to them being smart investors, but also at the same time, they are a little bit centralized in the way that they're holding on to things. So I'd be curious if A16Z is going to do anything about changing their fund structure, because if they're truly a crypto fund, they're going to do it in a DAO, I think. But we shall see how.
Okay, so to you, it's not so much of a shady business tactic. This is just kind of par for the course in the direction we're heading. Mostly a gig economy, and it's not just an Uber driver. This is also coders and some of the high end positions as well. So I had to delete DZ from my MySpace. William Pierce, yeah, that checks out. I remember you, Bill. I remember you. So last question now. I'm a sandbag you, Jeb, because you have high points already. Now, clearly, Ivan on Tech had it right. We should all just be learning coding. That's where everything is definitely heading. But Libra is supposed to, something they announced years ago. It's just been in development, purgatory for it seems like a long time. Does this lower your opinion of Libra, or was that just like so low already? We're already at the floor.
Frankly, I never had a very high opinion of Libra in the first place, so it doesn't change a whole lot. We could sit here and talk for an hour about Libra. I don't think that's... The thing about Libra is I don't like that Facebook is doing it. Anything that Facebook gets their hands on, I'm kind of on the same page as a lot of the other panelists here. I'm not the biggest fan of Facebook. Like, it's okay, but we've seen a lot of issues concerning privacy. But the thing I'm really interested in here is A16 Andreessen. I think he's going to be getting something that is very, very important, and that's talent. I'm a CEO of our company. We have 10 employees. I have 10 employees, like 7 full-time contractors who work with us to run our channel. So I know a little bit about how important talent is. We were actually just having our quarterly planning meeting, and one of the things that we said was a big strength of our team is, hey, we have team members that are super committed, super excited. They're very humble. They're very workable. We have a great team, right? Culture in a company is incredibly important. And the issue that Facebook has run into is their whole move fast and break things attitude has caused them to move very fast to the top 25 most valuable companies in the planet, while also breaking the trust of their customers. And they've also kind of broken their own culture. And I think a lot of people are leaving Facebook because they don't trust Facebook internally or externally. So I think they're really trying to branch out into these other fields like Oculus and Instagram and all these different holdings that they have. And what they're doing is they're losing key talent. So it's not surprising to me from the perspective of cryptocurrency that we're having people leave centralized organizations like Facebook that are kind of antithetical to what we mean, that what we stand for in cryptocurrency. It's not surprising to me that people are moving in the direction of crypto in the first place, but it's also not surprising on the other facet that Facebook broke the trust of the vast majority of their own staff and their own customer base, and they're losing talent because of it. And money is not what's most important in business. People are what's most important in business, and Facebook has killed the trust, which is what's most important to retaining people.
I like that as pithy. Move fast, break things, and yeah, they did that in spades for sure. All right, well, let's get to our second topic here. Bitcoin bulls holding strong. Now, we bring up on-chain metrics, and sometimes it can go over the head of some of our viewers, but some of this data is just very, 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 not alarming, very bullish, very, very bullish. So right now, we have Bitcoin wallets that haven't seen outflows, and it's over 5 months. It's 155 days. Now, this is, just think about it, it's a little bit less than half of a year. So almost 6 months here. And right now, they're sitting on $750 billion. And this is Bitcoin that hasn't been moving lately. Now, the long-term holders, they've increased over the 7 months 2.3 million Bitcoin over the last 7 months. That's what these long-term holders have accumulated. 2.3 million Bitcoin. They've only made 186,000 Bitcoin. So that's for the third topic. But so they've accumulated over almost 13 times the amount of Bitcoin that has been mined, that has been produced on a daily basis. So whatever Bitcoin is being made, these whales, these long-term holders are gobbling up over a dozen times as much. Now, I mean, this is a huge thing, Now, a lot of people are saying, oh, these Bitcoin whales, they're front-running an ETF announcement this month. There's another camp saying, this is anticipation of a November, December rally. Maybe it's a combination. But J Chains, what camp do you think that these whales are? Is it they just picture something really big happening towards the end of the year, or do you think there's some inside information going on here?
Well, I would definitely say that the whales that I think in the report it said something about these Bitcoin that haven't moved. There's like almost 13.5 million of them. I mean, that's you got to think like a big portion of the supply, right?
Yeah.
So this isn't a coincidence. This isn't just happening because there is something about ready to go down, and we all know it. We feel the energy in the markets. I mean, you look at some of these dips and rips. I mean, they happen so fast. Something is happening. It's going to happen soon, and it's going to be incredible. So I'm of the camp that says this is premeditated. They know what's happening. So pack your bags because we're going to the moon. Moon boys
Yeah.
and Lambo boys, we're back.
I mean, accumulating 13 times the amount that's minted every day, and you look at 7 months of this happening. Yeah, I mean, it's probably some price action is going to be happening now. Hack Crypto. I've asked a few guests, and it's the first time we've been on together, so I want to point this your way. Some people say, whales cause the price action. Other people say the price action happens and the whales follow. Where do you sit in the camp? How much power do you ascribe to the whales?
I think that leverage is newer to the crypto space, and that's why all these huge sharp ups and sharps down moves, because people are really using way more leverage than ever before. So I'd put more of the blame and the sharp up and down with leverage trading. But in terms of the whales, I follow the whale bot on Twitter. I love the fact that those bots exist to give transparency to like big transactions. And I think I said this on the last time I was on stream, was about what would happen if those whale bots existed and JP Morgan was using, the blockchain to transact, and those were going crazy every day showing where they were sending their money. It would just bring this crazy transparency to the world that I think it would really kind of blow some minds to see how much money they're moving around in value. And on this thread, bitcoinisdead.org, if you guys haven't had a chance to check out that URL, you should definitely give that a check-see, because I've been in the space since 2013, and that site is one of the best resources because it actually tracks the times that people have said that it's going to die. And interestingly enough, to Jay Chain's point for packing our bags for the moon, Bitcoin hasn't had a death call this month so far, which is one of the first months in history that there hasn't been a Bitcoin is dead headline going out and around. So definitely check that website out. It's a fantastic resource for just people basically calling Bitcoin a death spiral, and it's going to go to zero. And it's kind of a funny way of looking at it.
Yeah. We'll definitely wait and see. Yeah, definitely check out that site. Now, I do want to read. Miller Time just said, "How's J Chains not doing beer commercials?" I don't know. Are you Miller? Are you representing Miller? So I'm sure I'm sure he's open. He's not the one breastfeeding. He'll be okay. Now,
yeah.
Crypto...
Sign me up. Get me an agent. I want to do some beer commercials.
All right. Sounds good. He has a voice actor, everybody. Now, Crypto Keeper, we have these whales over the last, more than a half of a year. They're accumulating over a dozen times the amount that is being created. Now, as we start to head, towards that bearish winter, do you think that they're going to dump 12 times the amount that is being mined on a daily basis? Or is this like more of a long-term accumulation strategy?
Oh, you know what? Jeb and I were just talking about this before the stream, and I think that there's a couple different camps that people fall into. The camp that I fall into is more. I think that the bear market is going to be more derived from something falling and breaking apart in our economy. I just feel like I understand that there is that the government is able to play a very nice game of teeter-totter, right? But I think that we're at a point where everything is just about to bubble over. Everything is about to boil over. Now, to Jeb's point earlier today, he said, everybody's been talking about this for so long. When's it actually going to come to fruition? And so I love the idea that will never come to fruition. But I have been around for a few years, right? I do remember 2008. I feel like we have 2008 coming, and then some right now.
I
And
agree.
so, yeah, and I think it's going to be crazy when this does happen. When it happens, I think it's going to be crazy. But the timeline on it is the real question mark, right? Because I do believe, and I believe this wholeheartedly, that this is very coordinated. I believe that there are lots and lots of dinner parties where these whales are sitting down, having conversations, because let's be real, there's nothing that says they can't do it. And until these regulations come out and actually, say, hey, look, you can do this, this, and this, like it says in the stock market, until that happens, those dinner parties that I'm calling them are going to be happening a lot. And I
Yeah.
just, I don't know. I'd like to say I could toss a month on it, toss the time on it, but when it does happen, it is going to happen with a vengeance. It is going to happen.
Yeah, I agree. I think there are, some smoky dens with, expensive ornate tables, some whales sitting
Like
around it.
pictures of dogs playing poker.
Yeah, and then they
Yeah,
go
for
hunt
sure.
humans. Probably, they find a homeless guy or something. But obviously, I'm
gosh.
joking. Obviously, I'm joking. Now,
Good game, huh?
Jeb, let's talk about the other end of that scary, month when this might happen. Before that happens, we might have a supply shock. Now, if we do have a supply shock, or do you think we'll have a supply shock? If so, what month do you think this is happening? Is it like one of the next 3 months this year, or is this
Well,
going to be next year?
Yeah, well, I think we are going to run into some supply. I don't want to call them issues because I think it'll actually be a very good thing for the bull market. Look, we have questions over on our channel all the time. Like, for example, one of them is, Jeb, what happens if everybody is so bullish on Bitcoin that nobody wants to, transact Bitcoin and the liquidity dries up? What happens then? Well, first of all, that's kind of what we're seeing happen right now. You mentioned earlier $750 billion is being held in long-term wallets. I need to remind the audience, $750 billion, since the market's $1 trillion, is 3/4 of the market is being held in long-term wallets.
Yep.
Everybody's hodling right now. Nobody wants to sell. And we're sitting at a level right now that, frankly, the last 2 or 3 days has been really boring for the price, but we're sitting at a level right now that people dreamed about a year ago. Like, we've had a huge rally, and people need to keep that in mind. I think that a lot of people see what the writing on the wall is, and a conversation we were having before the show started, I was having with Crypto Keeper. One, I do agree there's going to be a giant collapse in our global economy, our global economic system. I just don't know that it's going to be this year or next year. I have no idea, frankly, when it's going to happen, because like you said, there are a lot of conversations going on behind the scenes, and I don't have access